Hello, everybody. It is the 10th of April, 2011, as of the recording of this video, and today's topic will be gold. We'll look at gold on a technical level, multiple time frames, a weekly chart, which will be followed by the monthly, which will be concluded by the daily chart. Look at trendline analysis, go through price action, as well as some Fibonacci. So let's get started with the video, and I'm going to go over the head and shoulders pattern back from 2008, 2009. This pattern, you have a left shoulder by coming down towards here, and then the head making a new low. When you conclude the head pattern, you come back up to the neckline, which is pretty much at this 1007 mark, which might work better than 1000. But I don't think that matters too much as far as exact numbers. And then the right shoulder in here. Now, some people have stated you can't have an inverted head and shoulders in an uptrend. It just doesn't work. And considering that it's already broke the resistance and had a nice gain, it probably already has worked. And not only that, but the reasoning why these work is it really shows more of a market correcting through time more than anything. It's another a variant for it, as well as how as the shoulder or as a pattern is completing, it makes a pattern of higher lows. So that's the bullishness that it entails. Now, some people like to take the length of the pattern, which means they take the high level, subtract the low, they take the difference, and they add it to the low. And in hindsight, or that the theory works very well, but how I've liked to do it instead is take the difference, the percentage gain from top to bottom, or at least the length of the difference on a logarithmic chart, which is what this is. So what we'll do is we'll draw a straight line from here to the level of support to give us the price objective, and add it on top of here, draw a straight line, and there we have it. This was the area gold was supposed to go to or projected to go to based on this pattern alone. It's there. It's made it towards that level. It was resistance because it corrected through time with a small price correction in here. And now the final week that we see here, the final candle, is showing a nice little breakout pattern breaking some significant resistance. A lot of confirmation will still be needed, but as far as what price action is telling us, it is breaking through. As far as some trend line analysis is concerned, what we'll do is we'll take the trend line that connected the main original low in here, this one in here, and what we'll do is we'll draw a parallel line to connect the resistance point of view. Draw this line in here, connect it up top, and this is what we get. The same rate from here is in here. We start with this top, which pretty much made it here. It was a pierce above it, a decent pierce above it here. And then it found resistance, pretty much found resistance. You can see it's been battling this for a while. The message of the market to me is telling me that it wants to break out. And it would be a pretty significant size breakout. Now, as far as other trend lines for this particular chart is concerned, we can take the rally that started from the breakout in 2009, and it's below this trend line. It broke below the trend line in here. Well, it held it here, really broke it here. It's found resistance. Well, what this is telling me is that this is more along the line as the path of, or the ascent rate is slower than it was before, because now to draw a trend line, I'd have a much smaller angle, because whenever you break a trend line, and in this example, an uptrend line, then usually what happens is you get a reversal, which means a change of direction, so the change from up is down, and obviously that isn't happening, especially when we're at nominal new highs. Maybe another thing that it does is it recaptures a trend and makes a serious a bear trap. And I can still do that, but it's really along the lines of that being correcting through time, or at least changing the rate of ascent. And well, that's exactly what it is. The rate of ascent is much lower. All right, so now what we're going to do is we're going to switch this up to the monthly chart. And if we do the same trend line analysis within here, we can see that if we draw one trend line, well, we're obviously above that. This trend line, well, we're above that. The opposite's happening here. The trend lines are growing stronger. The rally is growing stronger. It just happened that during this point in here, there was a heck of a lot of volatility. Now, for Fibonacci upside, what I'm going to explain here is calculating upside targets. The way Fibonacci works is you find a range in which a market trades. And in this case, the range that I'm going to take would be this one in here. This would be the range. It was a nice looking range because it was significant resistance and support on a few occasions, and it battled to get above that resistance line. We'll take, and how this Fibonacci works is we take the low, and in this case the low is 252. The high is 164, the difference is 164. So we take the number difference, which is 164, multiply it by 161.8%, which is a Fibonacci upside level, and you add this to the lowest point, which gives us 517. So if we draw a straight line in the area of around 517, and this is just ballpark, we would get an area somewhere over here, which is not much resistance. And 161 isn't usually that strong. It's like a video game. This is like the first level, which is usually the easiest level. And as you go to different Fibonacci upside targets, you're going to newer, grander levels that become harder. So the second one, the 261.8, is 680. So on ballpark level, that would bring us somewhere to the area below here a little bit. Roughly around here, because the low was over 680. It was like 690 something. At this area was resistance, and it had a nice pullback because it didn't make a pattern of lower lows. It continued the higher lows. Second time we come up here, increases the chances we take it out, consolidated nicely, making another higher low, and there's a beautiful breakout. That was the 261. Next level is 423. And the 423 was about 950. So if we take a straight line for 950, which would be somewhere around here, we can see how nice this resistance point was. It came up to the level as resistance in here, back to the previous support, and it managed to hold or correct through time along this line as it was completing its right shoulder. And then, of course, after that came the breakout pattern. 685 is next. That's 1376. And we're obviously above that because we're doing fairly well. We'll take a look at this better on the daily chart. But for now, there's where we have it. We can still find resistance at this level. That's possible. But because we've held for a few months at this level, we're starting to break out. This is looking very bullish. Not just bullish, but very bullish. Because when you have a significant level that's supposed to be resistance, and it either isn't and it skyrockets through it, or it's really not much, then it usually contains a fast move to the next level. Now, that's not much resistance. And as I said, we could still consolidate more through time. We could still correct. But the way it's pointing out right now is that it wants to keep going towards the upside, and probably pretty fast. Now the next level, which is the 1109, that's at 2070. So how long would it take on a fast move? Well, if you're looking at about 4 or 5 candles to do it, you'd be looking at about 4 or 5 months, which is quite a big move. Now the second thing we're going to do is take a look at trend line analysis, or the last thing on this chart. Then we'll go to the daily, and then we'll call it a wrap-up. We'll take a look at the original trend line that connected the rally back in here. We'll make a parallel line, try and make it exact, which it pretty much is. And what we'll do is we'll connect the resistance points, something like hit the most lines that we can, and this is what we got. And this is a good resistance line. Now the range is really, really small back and forth, which it could be the case sometimes. However, we look at the resistance, 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 breaks it, support, 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 support. There's many occasions where resistance became support, and since then it's been breaking out very nicely. What we'll do is what I'll do is I'm going to highlight this area and copy it. Reason? So that I can paste it and continue drawing trend lines that match up. What I want to do is I want to match it so the line is exact with the previous one, and then start drawing some parallel lines. And then what this does on the parallel trend line analysis, it gives me the same rate of ascent, and two, it gives me the same increase as the previous one. So continuing further, let's draw this so it's pretty much exactly straight on, and that could be better. Although that would be close enough. I want to do better than that. Okay, so there's a straight line. This tells me exactly where the trend line is supposed to meet up at. You draw exact same line, and what do we got here? A resistance area. That was resistance again here, found support, and has continued to break out. It's going through many of these levels, but when the level of the range is very tight like this, then that's normal. And within here, what do we got? We can see at this point here, it's now using this area as support and starting to break out. So there's a lot of bullishness within this trend, a lot of upside room, especially when you consider back in the previous run of gold, seeing the price go from 35 to 800, really 20 plus 25 times its value. And from its current level, 250, that brings you up to 5,000. Anyway, what we'll do now is we'll take a look at this on the daily time frame. Now within the movement from where we are now, let's just draw a straight line with this 1376 variable, which would be roughly right around here. Ooh, that's way too big. Especially if you're looking on that in a full screen. So this was the significant upside Fibonacci level that I was talking about, which was immediate resistance, pulled back, established a level for support, got above it, wasn't able to hold, went above and below it. But the higher low came into play, resistance at the line, and then above it. Now this time it found support again, found support but couldn't hold, and this is your classic bear trap. It went below the line and not for long. It's now went above it. It's starting to break through very nicely. Also, if you take a look at the low, which we had, that head and shoulders, really the difference was about 700 to about 1,000. And it worked out to about 42%. And 42% on 1,000 increase is about 1420. So therefore, that line has been taken out. The inverted head and shoulders line somewhere in this area in here. Well, once again, resistance was taken here, here, and here 3 times. It was holding this area for a while. It's also breaking through. This is giving me some very, very bullish tendencies. And even within here, it's hard to see, but there's an inverted head and shoulders in here with the price objective up towards the 1500 level. And overall, if you take a look at some Fibonacci again, we'll take a look at the difference from, let's see, what's the best Fibonacci line to work with? The support level that's really significant is probably roughly in here, which looks to be about 1315 to 1320. And the significant resistance point, well, it's once again, it's an obvious, it's within this resistance point in here. So the difference in here from 1320 to about 4, it's a little bit, we'll say even 100, which means a breakout of 61.8%. That would be about $60 or so, 60, 70. and that would take us from here to also to about the 1500, which would take us to the 161.8, which is a pretty easy level. But we'll wait and see. However, I'm going to end this video now because it's been 15 minutes and it feels like it's only been 7 or 8. The time is flying by. So thank you everyone for watching this video and have yourself a great week. Bye-bye.